Money FM 89.3, the best of the afternoon update. Market View on Money FM 89.3.
Emerging currencies seem to be weakening in the face of looming U.S. tariffs in April. The Indonesian rupiah has fallen to its lowest level against the dollar since the Asian financial crisis in 1998 due to uncertainties around U.S. President Donald Trump's tariffs and domestic factors. The Japanese yen is sliding to a 3-week low against the U.S. dollar, with Asia responsible for the lion's share of the over $1 trillion U.S. goods trade deficit. What is the outlook for Asian currencies? Yeap Junrong, market strategist at forex provider IG, joins us now to tell us more. Junrong, great to have you back.
Hey, good afternoon. Thanks for having me.
Now, let's start with a gauge of the overall market sentiment around the U.S. tariff. We're hearing a lot of chatter about upcoming U.S. tariffs. So as someone who watches the Asian currency markets closely, what impact do you expect on the Asian currencies? And how do you think this will affect currencies against the U.S. dollar?
Yeah, so I think the U.S. tariff has been this key overriding theme over the past month. We have been seeing a lot of these tariff flip-flops, where, U.S. President Donald Trump were to impose somewhat of a tougher rhetoric before, reeling back in. And then, so in a way, market participants really do not know where things are going from here. And over the weekend, we hear sort of a softer rhetoric coming from U.S. Trump again, saying that, tariff will not be broad-based, it will be more targeted, and there are room for consensus for countries. But as to what that really means, I think the details are still very much lacking. But at least we are seeing some sort of a recovery in terms of the U.S. dollar. So previously there was this whole fears of higher recession risk in the U.S. And now we are seeing the market sort of adjusting their expectations around there. And we are seeing the U.S. dollar recover as, markets are really pricing out some of the risk of recession and also the tariff impact.
Okay, and looking at the broader Asian landscape, how do you see other major currencies in the region, like the Singapore dollar or even the Japanese yen, responding to these developments?
Yeah, it does seem to be a differing or a diverging dynamic between the Sing dollars and the Japanese yen. So you just look at the US dollar with the dollar Sing, the US dollar with the Sing dollars, it is currently trading at around 1.338. And if you look over the broader horizon, ever since the start of this year, things have really been on a declining trend. And even with the recent recovery, it does seem to me that the upside in terms of the dollar Sing seems limited, which does seem to suggest that, the Sing dollar has seen some form of a resilience. And why is this so, I believe is that there is this sort of view that given our trade position with the US, we may be more relatively insulated from direct U.S. tariffs. And in that sense, we could potentially stand out as this attractive regional hub for businesses looking to bypass a U.S. tariff. So that may help to cushion some of the tariff impact that could come from the U.S. So I think things are looking promising. If you look at the STI, it has also pushed to a record high. And that also, sort of trade in line with the strength of the Sing dollars. Whereas for the Japanese yen, I think we are seeing some stronger weakening in that sense. I think there is this improved risk sentiment that has been weighing on the safe haven Japanese yen. And I think markets are also questioning on the scale and timing of the next rate hike from the Bank of Japan. So I think the recent tone has been perceived to be more dovish. Policymakers highlight certain uncertainties around U.S. trade policies. They say that they are willing to be more patient, potentially more wait and see. So that has also been causing some unwinding in the Japanese yen lately.
Okay, Junrong, I'm just curious to know, which specific Asian currencies are you watching most closely at the moment?
Yeah, I think if you look at the headlines, I think the most drastic move over the past few weeks actually came from the US dollar to the Indian rupee. And I think a lot of investors who are searching for, those carry trade appeal among the emerging market currencies, I think the Indian rupee seems to stand out fairly attractive. We know that there has been some form of a foreign fund inflows back into Indian equities over the past weeks that has helped to provide some support for their currency following all of these massive outflows since October last year. If you look at the Nifty, which is the Indian stock market, it has recovered more than 8% over the past 1 month. So I think there could be room for further downside in the US dollar to Indian rupee currency pair. I think some of the catalysts is that, India's economy is projected to grow 6.4% this year, 6.5% next year. So that outpaced the US. That suggests a lot of a resilience in terms of growth. And of course, when we talk about US tariffs, I think while the US, with this key trading partner with India, I think there's this consensus view that India could be less exposed to US tariffs compared to, in the likes of China and Mexico. If you look at India's major exports, it is pharmaceuticals, which are more resilient to tariffs. It's IT services, which could bypass tariff. Of course, we have some jewelry, textile, auto parts that could still be exposed to some of trade restrictions. But if you look at the overall mix, it does suggest that India may be able to sort of cushion some of those tariff impacts.
Yeah, indeed. The Indian rupee is on a winning streak and is marking, I think, 9 straight days of gains already. But let's look at the Chinese yuan. It's another one of the currencies that's been most closely watched. How do you expect the US dollar to behave against the yuan as we head into April?
Yes, I think looking at the near-term trend, it does seem that the US dollar to Chinese yuan continues to drift lower. We are seeing the formation of lower highs and lower lows. That suggests that there is this room that, the US dollar may potentially weaken further against the Chinese yuan moving forward, despite, some near-term recovery. But I think the broader trend still leans on the downside. I think the catalyst here is that, there are some views that against US tariff, the Chinese authorities may resort to sort of weakening the Chinese yuan. I think on our part, we do foresee a limited action on that part. I think the US has consistently labeled China as this, currency manipulator. So clearly their attention is on that. So, using that as a move to counter any economic impact from US, that could be counterintuitive. That could further invite US aggressive measures in that sense. So I think they are likely to turn towards more targeted fiscal policies depending on which sectors will be impacted. So on that front, we are actually really seeing some form of a confidence sort of returning to the Chinese economy, and that has also helped to sort of deliver support for the Chinese yuan.
Taking a more macro look, will inflationary pressures due to higher tariffs impact Asian currencies, particularly in economies with weaker monetary policy flexibility?
Yeah, I think the general view is that it leads to higher prices over in the US. And as such, there's this view that the Fed may be more restricted in terms of its rate cutting cycle. That is the general view. But of course, I think it is still too early to say how much of an inflationary impact tariff will have. Because if we look back towards the 2018 trade war, what we have seen is just a 0.3 to 0.5% addition in terms of U.S. consumer prices, and it's one-off. So in a way, inflationary pressure during the 2018 trade war seems limited. Of course, there are some front-loading kind of impact at play, but late last year we are also seeing a similar front-loading of goods from those major economies. So all of that could help to sort of dampen the inflationary impact. So whether it does have any long-lasting impact, I think it's hard to say. And there's this potential that it could just be one-off, and that shouldn't deter the Fed from embarking on this rate cutting cycle.
Okay, Junrong, with all of this in mind, what should traders and investors be doing now to navigate the potential volatility in the coming months?
Yes, I think generally I will lean more towards a risk-on kind of a stance. Of course, as we head into April, there will be a lot of volatility given that we'll have clarity over the US tariff. But my view is that if you look at the 2018 trade war, there was some sort of volatility, but, markets tends to overlook it. And then the bull market continued. It was only at around October, November 2018 where, we enter a bear market. And that is where, the Fed sort of reversed its stance to a rate hiking cycle. So in a way, it really depends on whether the economy will be able to weather some of those tariff impact. And if you look at some of the corporate earnings, some form of resilience in terms of the economic conditions, it suggests that there is still this room that we could avoid a recession and a downturn. So I would lean more towards a risk-on stance over the coming months.
All right. Thank you very much, Junrong. Appreciate your time and for sharing your expertise with us this afternoon.
Thank you, Lynn.
Yeap Junrong, market strategist at forex provider IG.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.